Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Hey everyone, welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our friends at PRMG, who are working for your best interest. So it's been a week, hasn't it? Last week saw interest rates all over the map, big jump up, caught a lot of people by surprise, right? Well, not you, because you've been watching this show and you know we talked about how important that 3.04% level was on the 10-year. We forecasted it months and months ago, and sure enough, April 25th, we hit on it just like we said. We thought it'd stop there, but then after a little bit of a pullback, we'd take another run at it. Well, that run came last week, and this time that run broke above it all the way up to 3.11 on the 10-year. And now we are maybe going to come back and touch 3.04% again as confirmation, but this time not as a ceiling, as a floor. So there might be some improvement in store for us, but I think it's going to be temporary. It's a good time to seize that opportunity and warn your clients not to get all giddy thinking that rates are going to go all the way back down again. I think this will be temporary. Watch 3.04 because I think once we hit that, you'll probably see another move higher. Looks to me like yields on the 10-year are now going to reach a target of 3.35%. Might not be within a week or 2 weeks, but eventually I think we move towards that. That's our next target on the 10-year. It's an important time for you to articulate the opportunity that exists. And listen, don't get bogged down in the fact that interest rates are up. Yes, refinance are lower, but I want you to think about a couple of things here. Number one, it's kind of a good thing long term because you are now planting the seeds for tomorrow's refinances. And I know you're going to have that opportunity. Because what we will see in the next 2 to 3 years is a recession. Recessions happen. It's not saying, okay, it will never be. There'll always be another recession because the economy is cyclical. When we see that next recession, interest rates will decline, giving you an opportunity to refinance these 5% transactions that you're doing today. So you're just planting the seeds, which means keep close contact with those customers. The other thing, too, is that some of you may have the ability to look at some of those longer-term ARMs, 7-year, 10-year ARMs, and you may see some benefit. Even if the benefit's not that great, it may still be worthwhile because, look, that customer probably won't keep the same mortgage for longer than 7 or 8 or 9 years. Because remember, the money you save for the first 7 could last you for another few years beyond that, even if rates go up as far as savings versus what you might have to pay additional over time. So don't look at it as just, okay, it's got to be 7 years. That 7 year, even if it goes up, it's going to be better for 8 or 9 years or so, even in the worst case scenario, which means that if you're going to take a look at that long term, either the customer will have moved within that period, highly likely, but if they don't, it's really probable that they're going to refinance, especially with where interest rates would be during a recession. So they will have that opportunity. I want you to think about these things, especially on your higher LTV loans, because most of you will see great real estate appreciation. And that means if you do some of these loans today at a 90 or a 95, you really want to think about long-term refinancing them anyway because you can get them out of MI. So why not put them in a longer-term ARM, protect them, and then 3, 4 years from now, they'll have the appreciation, they'll have the lower rate, save the money today, put them in a lower rate in the future, and eliminate MI. You'll want to refinance them anyway. So think about these things. Now this week, there's a lot of housing data which will underscore what we've been talking about, the hot housing market. You've got to focus on your purchases. Use all of the amazing tools in MBS Highway to do that. If you haven't taken a look, quite frankly, you're nuts. Okay, I mean, what are you waiting for? Truthfully, are you waiting to just continue to lose transactions to others, or are you ready to start winning and beating others and taking transactions away? Because it's a zero-sum game. The days of transactions rolling up on your doorstep are over. Refinances are at their lowest share they've been in more than a decade. You've got to work on purchases. We'll help you do that. Close more transactions. Go ahead and sign up. Talk to you soon. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS highway trial.
This is Mortgage News Network.